Tax 2601 May June 2017. Obviously it's a 2-hour paper. Always when looking at exams, always start with a question that you can easily and simply answer without too much hassle. Looking at this, they're all 25 marks, all 30 minutes, so it doesn't really matter where you start because they're all pretty much the same in terms of marks and general overall difficulty. So if you've done question 1, let's look at it. Question 1, 30 marks, 25 marks, 30 minutes. You're obviously looking at Marble Robots here, which is a company. They are an SBC, so if they're SBC, you obviously know that we need to apply what?
Sorry, sir?
The provisional tax tables, right?
Yes,
the
sir.
sliding
Yes,
scale.
sir.
Okay, what is the required want here?
The required wants us to calculate the income tax liability for Marble Limited. Sorry, I just need to open up.
2601, right? Obviously, we're doing May, June. They want you to work out taxable liability. So do you agree that's income less deductions
Yes, sir.
and allowances, then add taxable capital gain, and then get taxable income. Make sense?
Yes. Yes, sir.
Okay, so you're obviously wanting to work out that, and then what are you going to use? You're going to use the tax tables for an SBC.
Yeah. Okay.
Great, so let's see how you did in terms of the approach. Obviously, we start at the beginning. So if we look
Yes,
at number 1, or the first part. The first part obviously tells you a bit about the business.
Yes,
They
sir.
say she had correctly calculated the taxable income from the year assessment ending 31st March to be 2486 before taking the following into account. So, starting taxable income,
2486.
for adjustments,
Yes, sir.
2486. That's what we've got. Okay, that's what we're starting with. Great. Next, machinery and equipment.
Yes, sir.
Right, first paragraph. What does it say?
A new crane was acquired at a cost of 600,000 rand on the 1st of January 2017 after the old crane was destroyed in a riot by striking staff on the 22nd of December 2016. The new crane's brakes were modified at a cost of 40,000 to make the crane safer to use in the operations of the company, and it was finally brought into use on the 1st of February 2017. The cranes are used in the company's manufacturing activities.
Okay, good. So SBCs get special deductions. Do you agree?
Yes, sir.
Okay, SBCs get additional write-offs in terms of their assets. So I've got a crane here. It was acquired 600,000 1st of January. What is our year of assessment?
Our year of assessment is it's the 31st of March 2017.
Very important, hey? Why?
Yes.
Because you need to check if this falls within the year of assessment. So does it?
Yes, so it does.
Okay, when did you buy it? 1st of January, so that is during the year of assessment. After
Yes, sir.
the old one was destroyed.
Yes, sir.
The new one was modified, so obviously 40,000 will be included in the cost. Do you agree?
Yes, I actually have a question about that, sir.
Yes.
At first, I wanted to add that to the crane,
No, you do
but then I
have
was. Oh, you just added the 40,000 to the crane.
to. Of course, why? It's part of the crane.
Okay. Yes, sir.
Okay, you wouldn't be able to use the crane without this modification.
Okay. Yes, sir.
Okay, so it's all the costs associated with bringing it into use.
Yes, sir.
Okay, the cranes are used by the company's manufacturing activity. So is this a manufacturing asset?
Yes, sir.
Is it movable or immovable?
It's, well, movable, sir.
Yes, okay. I would also agree with that being movable. They didn't specifically say that. I mean, some cranes can be immovable, but then that's like attached to something. So cranes are like normally moved around and created like in the places that they needed. So obviously as a deduction or allowance, if it's a movable asset, you're going to be looking at section 12E for an SBC.
Yes, sir.
Manufacturing assets, how much can they deduct? 100%.
100%. Yes, 100% deductible.
Yeah. So they're going to deduct 640,000.
Yes, sir.
Okay, next.
The old crane was originally purchased on the 1st of April 2011 for 450,000 Rand and had a tax value of nil on the 22nd of December 2016. A steel recycling company paid Marble 20,000 Rand for the scrap of the crane. Other items damaged in the riot were the main gate and the security house. These were repaired at a cost of 13,000 Rand, which was recovered from the insurance company on the 15th of February 2017.
Right, thoughts?
The first thing that I did, yes, recoupment.
Good.
Yes.
Recoupments are specifically included as part of income.
Yes, sir.
A recoupment is what?
It's,
proceeds
yes, sir.
minus tax value.
Yes, sir.
What are your proceeds?
Our proceeds were 20,000.
Tax value?
Was 0, sir.
Good. Limited to previous allowances.
So,
Okay, which you can assume were greater than 20,000. Obviously, this asset was worth 450.
yes, sir.
Okay.
Yep. Okay.
So recoupment of how much? 20.
Yes, sir.
Good. What else?
I saw insurance payout of 13,000 Rand. But did I? Yes, insurance payout of 13,000 Rand. I added it as income, so I'm not sure if that would be correct.
Okay, let me ask you about this. Is the
Yes.
insurance payout for is it capital in nature? Let me ask you that.
Yes, sir.
What is it for?
It's for the damaged gate and security house, sir.
Yes. Okay, and then you had repairs, right?
Yes, sir.
Okay, the repairs were how much?
Sorry.
30,000.
These were repairs at a cost of 13,000, yes, which was covered, yes, sir. The
Okay,
repairs
so
were 13,000.
30,000 was the repairs that was recovered by the insurance company. Do you agree?
Yes, sir.
But that was to repair what? A damaged gate and security house.
Yes, sir.
Yeah, so in terms of the income here, the insurance payout for damaged gate and security, I wouldn't put this in. I would put null because I would say this was capital in nature.
Okay.
Because I would still show it, but I would just show 0.
Okay,
And
sir.
then I would also use the deduction. So repairs to the gate and security house, I would also say capital in nature. So you wouldn't be able to claim the deduction. Got that?
Yes, sir.
Okay, good. Buildings.
Buildings. Marble's head office was located in a leased / brackets rented premises at a monthly rental of 20,000 Rand until 31st December 2016. On the 1st of January 2017, Marble acquired a new and unused building for 4.8 million directly from the developer and moved its offices to the new building on the same date due to a dispute with the landlord of the leased premises. The building was fully furnished on the 1st of February 2017, and the cost of the furniture was 80,000 rand.
Okay, good. Thoughts?
Well, the first thing that I did was I referenced section 13 Quinn.
Okay, before you look at the building allowance, I want to know about the rent.
I actually don't know because I didn't put that in when I actually had a question on that. Firstly,
okay, what's the start of the year, financial year?
The start of the financial year is the 1st of April, the 1st of April 2016.
Good. So 2016, 1st April. So it'll be April, May, June, July, August, September, October, November, December. 9 months rent.
Yes, sir.
Section 11A.
It's deductible.
Yes, why? You paid it and it was for office space.
Yes, sir. Okay, I didn't add that in.
Okay, so 180 is going to be deducted as a Section A 11A deduction, normal general deduction formula. Then what happened on the 1st of Jan? You bought a building.
Yes, sir.
Now you can tell me about the immovable assets. Commercial building, right?
Yes, I said it's a commercial building.
Good.
I said it's a commercial building, so that 4.8 million would have to be...
Only the 4.8?
Well, I treated the 4.8 million and the furniture separately, sir.
Good. Okay, furniture is an immovable assets.
Yes, sir.
Yeah. Okay, but we'll discuss the furniture just now. Let's first deal with the 4.8s. How much are they going to get?
4.8 times by 5%, which is 240,000 rand.
Good. Right. What else?
Yeah. Okay, then after that, I went to furniture. I said furniture would be looked at under section 12E, and
hold on. 12E. Okay. Yes. Fine. Non-manufacturing movable assets. Agreed.
Yes, sir.
Okay.
And I said that it's still within its first year of use, so I multiplied it by 50%. So.
Yes. Good. 40,000.
Yes, sir.
Nice. Next.
Next, it's a contract. Marble was awarded a contract to build a new power station for 10 million rand by the power group. Sorry. The building project will begin on the 1st of October 2017. The contract stipulates that Marble will receive an upfront payment for 200,000 rand to purchase the required materials. On the 25th of February 2017, Marble received the 200,000 rand. On the 10th of March 2017, the Board of Directors of Marble approved a bonus of 20,000 rand for the sales director for getting the contract. The bonus was only paid to the director on the 27th of April 2017.
Okay, thoughts?
I was very two-sided about this, but what I did was I only accounted for the upfront payment, which was the 200,000 as an income, sir.
Good. Okay. This was it a deposit? Not really. Upfront payment.
No, the upfront payment, sir. Can I ask you now, sir? In relation to this, right? So usually we would say that income, whether received or not, we would account for it. Why wouldn't we account for the full 10 million? Because I just looked at it because it was an SBC. I just thought, well, if we account for the full 10 million, then I don't think that this company would still be looked at as an SBC. So that was my reasoning, but I don't think that was a good enough reason for why I wouldn't have accounted for the 10 million.
No, the SBC is fine. I think the SBC, the requirement, I think, is 25 million, if I'm not mistaken. We'll have to check that.
Yes, sir.
Is it 25?
I'm not too sure. That's why I was asking.
Let me go open up study notes number 4. I think it was 4 or 5. 4. Let's try 4. Oh, yeah, less than 20 million. Here's it. See?
Okay.
20 million, not 25. So the 10 million still makes them an SBC.
Oh, okay. Yes, sir.
You see that?
Yes, sir.
Okay, so that's actually irrelevant. What is relevant is what you said previously, which was what? Income is recognized when?
As and when it's received.
No, not when it's received.
No, so income is received whether it's recognized, whether it's been received in this period or not, sir.
Or not, exactly. So it doesn't have to be received. Did you receive 10 million?
No, sir.
No, but must you still recognize it?
Yes, so that's why I'm asking. So would we have recognized the 200,000 and the 10 million separately, sir?
Yes.
Okay.
Okay, but the 10 million needs to follow that whole. Well, actually not, because this is just look at income, so it's not a deduction. So you would have 10 less 2.
Okay.
Like that.
Okay.
Oh no, 200,000, not be an 8.
9.8 million.
Okay, what else?
After that, payment received. Oh yeah, I looked at the bonus
Yes.
that the director received.
Correct. What about it?
I put it as a deduction because it's I looked at it sort of like salaries and wages in a way.
Yes.
So the full 20,000
Yeah,
paid.
the full 20 could probably be deducted because then you've got to look at the prepaid, not the deduction stuff, right? Let me go back there now. This is chapter 5, I think now we're looking at. Let me just find that. Yeah, where was it? Prepaid expenses. Within 6 months or less than 100,000. So obviously this is less than 100,000 and it's within 6 months. Do you agree? The whole prepaid
Yes.
expense story.
Yes, sir.
Okay, but it's actually not prepaid because the bonus is only payable on the 27th of April. Do you agree?
Yes, sir.
It's paid on the 27th of April. Right, but it was approved now, so you'd be able to deduct it. Okay, what else? Next, bad debts.
Bad debts. Marble wrote off a bad debt of 128,000 rand as the customer had become insolvent and could not repay the debt. I fully deducted that, sir.
Good. Electricity.
Electricity. The electricity bill for March 2017 for 8,500 was only received on the 10th of April 2017. I fully deducted that, sir.
Good. Motor vehicle.
Excuse me. Motor vehicle. On the 1st of January 2016, Marble acquired a new vehicle for 150,000 rand to be used by the engineers for site visits. Marble was approached by the Tshwane municipality to sell a truck to them. to them when Marble decided to discontinue a waste disposal venture with the municipality. The truck was acquired for 210,000 Rand on the 1st of May 2016 and was sold for 80,000 Rand on the 31st of January 2017. Marble was elected to use the Section 11.0 scrapping allowance where applicable.
Yeah, so let's first look at the first bit here.
Yes, sir. So the first bit, they acquired a motor vehicle for 150, sir. So what I did was, because I looked at the year in which it was bought in first. That year was the previous year of assessment. So I looked at that as my first year, and then my second year was the year that we currently are in. So the first year in the first year we multiplied by 50%, which was 75,000, and then this year it was by 30%, which was 45,000.
Good.
Yes, sir.
Okay, then let's talk about the next parts.
Yes, sir. So now the next part, sir, it was a sale. So basically what I did was I kind of looked at that equation that we usually do, the cost minus allowances equals TV, and then basically the part that I really got to was the proceeds minus my tax value to give me my scrapping allowance.
You're working for this, eh?
Yes, sir.
Okay, so let's start with cost. How much?
The cost was 210. Yes, sir. It was 210,000.
Proceeds?
The proceeds were 80,000, sir.
Tax value we need to calculate. Okay, so what was the cost? 210. We're going to subtract.
Yes, sir.
Right, when was this first bought?
This was first bought on
1 May.
Yeah, on the 1st of May 2016.
Tax year?
Yes, sir.
Yeah, so how much would you have claimed?
Would have claimed the full 100%, sir, because it was...
It's a non-manufacturing asset.
Oh, 50% then, sir.
Yeah, you'd only claim half of it, eh?
Yes, sir.
Okay, 50% of 210. Okay, so in other words, the tax value would be half of what this is.
Okay, yes, sir.
5. Do you agree?
Yes, sir.
Okay, so scrapping allowance, yes.
Yes, sir.
How much? Well, proceeds minus tax value. Deduction or not?
105. This is, sorry, I'm a little lost where we are because I've been looking down. But what I did was, it was that 210 minus the 105, sir, which gave me 105 as well. So I said, after that, I said my proceeds of 80,000 Rand minus my tax value, which was 105, but then that gave me a loss of 25,000. So. Yes, sir. So I was right.
Yes, good. Yes. Right, restraint of trade.
I've got a question on this because restraint of trade. I did a calculation because it's supposed to be either the lesser of the 3 months or the year that you are given. I mean, the 3 years or the years that you are given, right, sir?
Yeah, I need to go back and just check that.
But now, yes, in the notes it said section 23L says that, and I'll get you the page. So I just forgot what page it's on. I think page 13 of my second book. But then in the textbook, when I looked again, page 17 actually, it said that it's a prohibited deduction.
Okay,
so
a restraint of trade is a special deduction.
Yes, sir.
So meaning it's not It's not going to follow the general deduction formula, but that doesn't mean you don't have to put it in.
Yes, sir.
Okay, it's a special deduction.
Okay, yes, sir.
Okay,
Because
so the head architect from Marble started his own construction company. Marble paid the architect restraint of trade compensation of 129 on the 1st of April 2016. Is that important? Yes, it's during the year,
yes,
right?
Sir. Yes, sir.
In order to restrict him from starting his construction company in the same town as Marble for a period of 2 years. So the smaller of the given time or 3 years. So 129 divided by 2 gives you
64,500.
Yes, or
divided by 3.
Divided by 3.
Which is 43,000.
Right, so which is smaller?
43,000, sir.
Yes, so restraint of trade.
Yes, okay.
Deductible, right?
Yes, sir.
Okay, this was for a period of 2 years. Only 115 of the shred of payment was taxable in the architect's hands. That's talking about the payment in terms of what is taxable to the architect. So obviously if he's only taxed on 115, you'd only be able to claim 115.
Yes, sir.
Okay, so there would be a small portion that wouldn't be taxable. So in actual fact, in terms of your deduction, it will be limited to 115 divided by 3. Okay, and then how many months is this? 1st of April 2016, April, May, June, July, August, September, October, November, December, January, February, March. Oh, it's actually the whole year, so it's fine. Okay, so 115 divided by 3 as a deduction.
Oh, okay, so it's not the 43, it's the 38,333.
Yeah, because obviously SARS won't allow you to claim more than what is going to be taxed. So if your employee is going to be taxed on the 115, they're only going to allow you to claim the 115 divided by 3 as a deduction, even though you paid them 129.
Yes, sir.
Okay. Next.
Next, it's the sales. Marble concluded a sales transaction on the 15th of March 2017 for 380,000 Rand, and the amount was still outstanding on the 31st of March 2017. The company's savings account earned interest on the 17th, interest of 17,000 Rand for the period until 31st March 2017. What I did was I added the sales to my income, which was 380,000, but I actually also added my interest my interest. My interest. I also added to my income, so with 17,000. Interest? No, sir.
Why? Marble's a company, not a person.
Yes, sir.
Okay, good. Next.
After that, it's Marble incurred the following legal expenses. The first one was for the collection of trade debtors, which was 10,000 Rand, and a legal contract, which was for the director's holiday home purchase.
Good.
So what I did was I put them both down, but for my collection of trade debtors, and I added it as a deduction for the 10,000. But for the director's holiday home, I said no.
Good.
Next, a trademark ring was purchased on the 1st of January 2017 for 80,000 Rand. The expected useful life of the trademark is 8 years. On the 1st of December 2016, the company also renewed the registration of its Beep trademark for another 5 years at a cost of 15,000 Rand. With this one, sir, I realized the first thing that I did was I only took into account the renewal because the acquisition does not apply or does not qualify for a deduction. So I said, I wrote the trademark ring, which was an acquisition. I said Section 11 GC does not qualify. It says that the acquisition does not qualify for deduction. So I said then no. I'm not sure if I was correct there, but I said no. And then after that, I said the renewal for Beep, Section GB. I kind of got stuck because I wasn't sure whether it was a copyright, patent, or design.
Okay, that's good. So yeah, let's look at the details. Okay, so when you look at a registration of a patent, a copyright, or a trademark, Section 11 GB allows a deduction in respect of expenditure actually incurred in obtaining the grant of any patent, the restoration of any patent, the extension of the term, the registration of any design, the extension of the registration period. So what do we have here? We purchased 1 Jan for 80,000. The expected useful life of the trademark is 8 years. Okay, so that was a purchase of a trademark.
Yes, sir.
Acquisition of patents, copyrights, and designs. Section 11 GC provides for an allowance in respect of expenditure actually incurred, commencing on or after, to acquire. Okay, that's fine. Let's look at the next bit. Okay, in terms of the deduction is allowed in the year of assessment which the property is brought into use. If the expenditure is less than or equal to 5,000, it is deductible in full. If the expenditure exceeds 5,000, the allowance is 5% of the expenditure in case of a patent, copyright, or similar property, 10% in the case of a design or similar. Where assets of this nature are created rather than acquired. Okay, that's Section 11D. Okay, so looking at this, a trademark ring was purchased on 1 Jan 2017 for 80. Okay, if you purchased it, that means you would have to apply Section 11 GB allows the deduction in respect of expenditure actually incurred. Okay, if such a patent, design, or trademark is used by the taxpayer in the production of his or her income. Note that the section does not allow a deduction in respect of the actual cost of acquisition. Okay, so this is obviously looking at the cost of acquisition, which we did apply. So yeah, so this would be null. Okay, then renewing it, the expenditure actually incurred to acquire. If you're acquiring it, this would be the renewal of. So yeah, the renewal you would be able to claim, and then that'll be according to whether it was 5 or 10%. So what do we have here? They don't actually say what it's for. Yeah, they say it's a trademark though. So if it's a trademark, it wouldn't be a design. It'll probably be 5% because it's patent, copyright, or similar, like knowledge rights.
Yes.
So I would use 5% here. 5% of 15,000. Okay, if it exceeds 5,000, which it does. Do you agree?
Yes, sir.
Okay. Right, minus 750. Great, and that's it, eh?
Yes, sir.
Good. So let's add up.
Sir.
Sum up. What's wrong?
Sir, I forgot to say I forgot to add or let you know about. Remember, sir, that within our vehicles we sold that vehicle to. We sold that vehicle to, I think, the scrapyard or something like that. Oh no! We sold the vehicle to to the municipality, and we got 80,000 rand. So don't we add that as an income?
What number?
Number 6, under motor vehicles.
That's
Towards the
capital in nature.
Oh yes, that is. You're right, sir.
So you have to put that as a taxable capital gain.
Yes, sir.
But if you made a gain, but did we make a gain?
No, sir.
We made a loss, actually. So you would actually work that out over here. You can actually do it. I don't know if they want you to do that, though, because I don't think there's enough information. But we can. Okay, so obviously this will be proceeds minus base cost, right? What are the proceeds?
The proceeds were 80,000.
Base cost here would be where's my working? Here's it. Okay, adjusted proceeds minus the allowances. So allowances were 105 would be the base cost. Gives you a loss, scrapping allowance. See, but the scrapping allowance you've already put in. So there is no capital gain and there wouldn't be a capital loss.
Yes, sir.
Okay, because you're already claiming the 25 as a deduction. So yeah, no, you wouldn't do that.
Okay, yes, sir.
Capital in nature. Got that?
Yes, sir.
Okay. Sum up. There's the deductions and allowances. Okay, so taxable income.
Yes, sir.
Income minus the deductions and allowances gives you that taxable income. Okay, then you use the tax tables. Do you agree?
Yes, sir.
Okay, so now I'm going to go back and I'm going to look at my tax guide. There's SBC. Small Business Corporation. See it?
Yes, sir.
Okay, we are where? Here. Right, so tax is 59,150 plus 28% of 11527,417 minus 550000 close bracket equals. Why is it showing as a percent? Let's change it. Number. Okay, here we go. Oh, that seems a lot. Oh, it probably is right though, because I mean it's 11 million, so 28% of 11 million is high. Let's just check the number. 11527,417. Or maybe
I got the same thing.
6.67. Okay. Yeah, but that's right as is. So you get that, yeah.
Yes, sir, I did.
Okay, and let's just see rand. Yeah, 3.3.
Yes.
Okay, yeah. So it's realistic because I mean this business made 11 million. Yeah, so it's a lot. Okay.
Yes, sir.
Right. Yeah. So good job. You did a really good job with that question. Looks like you're understanding it quite well.